So the question is this: how do you file for your tax for 2026, right? So in 2026, you have been told that you need to file your tax before the 31st of March, and that's the deadline that you are given to file your personal income tax. And personal income tax is filed by those who are earning an income, or even if you have one employer, right, in your business and you're running a business, you still have to file what is called the personal income tax. So if you are running those kind of businesses, or you are an individual who earns a salary, you should file a personal income tax. If you have not done that, you have to file by latest 31st of March. If you don't file, after a month, you'll be paying a fine of 100,000 naira, and thereafter a subsequent fee of 50,000 naira on other months that you refuse to file. So it means that it is compulsory to an extent for us to file annual return for personal income tax, right? To carry out personal income tax fine. So the question now is that how do you even know how much you're supposed to pay for your personal income tax? So the first thing I would advise you is that you should go to the FIRS office that is closest to you to make and get the perfect inquiry to be able to know what you are supposed to file or pay for your personal income tax. That's the first thing. Second part, if you are doing your research, and if that's why you're watching this video, I'll be walking you through the different information I have on how you can carry out your personal income tax and how to know what you should be paying for your personal income tax. So the first thing I want to do is that I want to tell you that the FRS has moved from FRS to NRS, that is National, is it Nigerian Revenue Service now. So you need to make sure that you are aware of that, right? So wherever you go to, the FRS or the NRS office now that you go to will be serving as a center where you can, file your tax and get unnecessary requirements, necessary information that you need to carry it out. Next thing you want to do also, you want to make sure that all your records are properly done. You want to know what are your deductibles and everything. That's what I'll be walking you through in the video anyway. So let's go into the video very quickly. So I'll be showing you my screen right now, and this is the fiscalreform.ng website. This is the fiscal policy and tax reform website where they have created what is called a tax calculator, a personal income tax calculator. Now you come to this website or you just Google search personal income tax calculator on Google, and then to bring you the first option you see, just make sure it is carrying the Presidential Fiscal Policy and Tax Reform Committee website, right? So come to this website and then scroll down. So don't forget that this personal income tax calculator simulates the tax rate you'll be subjected to under our proposed Nigerian tax bill, right? So as well as the current tax rate as stipulated by law, allowing you to compare and understand the potential impact on your income, so that before you even go ahead to the FIRS office or the NRS office now to ask for, how much am I supposed to pay in tax, you already have an idea of what will be deducted and you know what are your possible deductions, right? So the next thing you want to do is this PAYE tax calculator. Let's go through it. So the old law versus the new law. So this is just for your information, right? So let's look at the basic income. So this is for the old for the new law, right? So if your gross annual income, so what is your gross annual income? So your gross annual income, right, is the total money you earn in a year before any tax is removed, right? Before any tax deduction is done. So this includes like your retirement or insurance or other withholdings are taken out, covering all sources like salary, bonuses, tips, and investment earnings. So it represents your total earning power, contrasting with net income, which is your take-home pay you actually receive after deduction. Lenders often use this figure to assess financial stability, and it's calculated by summing up all your income streams over the year. So I wanted you to be sure that you understand what your what your gross annual income is. And if you don't understand it, then you might not even know what information you should be supplying. So the next thing we want to do now is this, that after you have an understanding of what your gross annual income is, so whatever source of income you have. So let me give you a very good example. Let's say you are a social media manager. You also have daily pay, like you have a business that you do a job that pays you an income. Maybe you are paid 70,000 naira on a monthly basis, and you have a social media gig that you do maybe on a daily basis, right? You have some people you attend to. That's another second stream of income. You also have graphic designs that you do, maybe flyers and all. That's another source of income. You also have, maybe you go out for videography projects and all those things. That's a fourth source of income. So when you calculate everything you make all through those income, that's your gross, income, right? And gross annual income over the year now, right? But you must also understand that you must be able to get this income recorded. So all those ones that can be traced, for instance, those that can be traced through your bank account, so you are receiving them through bank account, don't forget that there's always a record for that. So that you are using PayPay, OPay, First Bank, Echo Bank, you have different banks you are using for this transaction, does not mean that your total gross earning will not be deducted, will not be deduced. It will be, this can be deduced, right? Because your bank verification number is already linked to all these things. So if the taxman wants to get everything your earning is, they can do that at a point in time. So you don't have to go ahead and be hiding your earnings. So after you have done this summation and you have gotten the total, so let's say at the end of the year, your gross annual earning is running to about 5 million naira on an average, right? 5 million naira, right? So next thing you want to do is that now your NHF contribution. So your NHF contribution is your National Housing Fund scheme, right? This contribution is very important. That is if you are engaged in it. If you are not engaged in it, then it should be zero. But what is this NHF that we're talking about? Now, the National Housing Fund contribution is in Nigeria is mandatory saving scheme for public sector employees, rather, and a voluntary one for private sector employees. So requiring a reduction of 2.5% of employees' monthly basic salary. So if someone is earning 100,000 naira at the end of the month, 2.5% to be removed. I think that should be around 2,500 or thereabout from the monthly allowance that will be removed for that. But if you are making $1 million in a month, I think that will be 25,000 or thereabout that will be removed. So you do the math and get the exact amount that will be removed for your NHF, right? So here are the key details regarding the NHF annual contribution regulation. So 2.5% is removed, right, from your monthly income, monthly salary now. Annual calculation, if the basic salary is constant, this equals 30% of the annual basic salary. That's 2.5% times 12. So at the end of the year, it would have been about 30%, right? So, but if you are not involved in any NHF scheme, then you don't have to put anything, right? So whatever it is, we need to find the 2.5% of your 5 million naira. So this simply implies that someone who is earning about 5 million naira on an annual basis will be earning about 416,000 naira per month, right? 416,000 naira on a monthly basis. Now, what we want to do here is that we want to know what the 2.5% is on a regular basis, right? So 416,000 is what they are earning in a month. So now let's do your 2.5%. 2.5%. That's this times 416. Let's just say 417. 417,000 on a monthly basis. That means the person is contributing 10,425 naira every month. So don't forget, the person would have done this contribution for 12 months, right? For 12 months, and that will give us 125,100 naira. Please follow my math. 25,100 naira. So that means the annual NHF contribution for this person, 125,100 naira. So it's important that you are able to get these particular deductions right. Don't forget, they're optional. If you are not participating in this, then you don't even have to fill this in, right? So, but these are deductibles. These are your deductibles. So let's look at the NHIS contribution itself. So your NHIS scheme, which is the National Health Insurance Scheme, right? So it is formally operating under the National Health Insurance Scheme Authority Act of 2022. Now, this has different contribution structures for formal and informal sector. So note that this NHIS was rebranded to NHIA, right? And contribution are legally required by companies with 10 or more employees. So if you have up to 10 employees, then this contribution is very, very important, right? So, and I'm looking at this from this angle of those who are employees, not the employer's angle now. So now contributions are based on percentage of the employee's basic salary and are generally split between the employer and the employee. So the total contribution at the end of the month is 15%. But that 15% is not going to be borne by the employee, but the employee or employer is going to go contributing 10%, while the employee is going to contributing 5% of their basic annual or monthly salary. Monthly salary of 5% will be deducted for this NHIA, right? So don't forget that this coverage covers the employer, spouse, and 4 biological children under the age of 18. So other fees, 1/5 charge for the whatever the case is. But what our major concern is this 5%, because you as the employee, you'll be charged 5%. So what's the 5%? Don't forget our first the amount you are earning per month. If you are earning 5 million based on our example. So your earning is 417,000 in our example per month. So if you are earning 417,000, now let's take the example here. You are going to be paying 5%. So 5% is this. So we are multiplying that by 417,000 naira so that you know how much you are supposed to be paying. Oh, sorry. Let me come back again. Let's do 0.05, right? Times 417,000. I hope you are getting my calculation right. 417,000 equal to, so you are supposed to pay 20,850 at the end of the month. So now don't forget you'll be paying this for the next 12 months, right? So that means at the end of the month or the year annually now you'll be paying 250,200 naira. 250,200 naira. So let's do that. 250,200 naira. So I've gotten our NHF, we have gotten our NHIS contribution annually. So while for the pension contribution annually right now, the pension contribution is in Nigeria, pension contribution is governed by the Pension Reform Act. But don't forget, the major thing I want to understand, the minimum total monthly contribution is about 18% on a monthly emolument, right? So this is defined as the sum of the basic salary, housing allowance, and transport allowance. So whatever the case is 18%. If you are not into any pension, in this particular example, we are going to put in it as 0 because we don't want to add that. But if you have a pension contribution, you are going to be doing 18% of that, right? So the employers is going to be contributing 10%, while the employee is going to contribute 8%. So what you'll be doing calculation for is 8% of the whole transaction. Because of my time, I don't want to go into that. So you just go to your calculation and do the 8% of that's times 417,000, right? So that means at the end of the month they'll be paying 33,000. By the end of the year they'll be paying 400,000, 400,320 naira, right? So you do that for the interest loan also. For housing, what about the interest loan? This is going to be unique depending on whatever person you are dealing with, right? While the life assurance also premium, if you have a life assurance, fine. If you don't, it's not deducted. Now for your rent, I think I'm interested in the rent. So for your rent, you are eligible. Only tax payers whose pay rent can provide proof. You must have your receipt, payment of receipt for your rent, right? Receipt of payment for your rent. So and you can deduct 20% of your annual rent. So if your rent is 500,000, for instance, you can deduce 20%. But once your rent is more than 500,000, then you just have to remove. So if your annual rent is 2 million, so you cannot remove 20%. So you can see that 20% of 2 million is 400,000, which is fully deductible. So, but once your rent goes beyond that and you are getting more than 500,000, right? You cannot deduct that. The only least that you can reduce is 500,000. So that means the deduction for your rent is 500,000. So in this particular example we're having, let's assume that the rent also here is 500,000, which is deductible, right? 3. All right. So let's calculate what our pay comparison is. So look at it. So we are concerned is based on the new tax law, right? So look at the total now. Taxable income. So at the end of the day, after deductibles have been removed, we only have 4.5 million that is taxable, right? So and the first one, 800,000 is free. The next one, so the first 2.2 million, they only remove 330,000. The next second one, which is going to be remaining 1.5 million, they'll be removing 274,000, right? So while all others will be carrying 0, and then my final tax I'll be paying will be 604,000. Based on the former tax law, you'll be paying about 631,000, which is a good, comparison compared to what you used to have before, right? So effective tax rate will be 12% here, while this is about 13%, right? So guys, I hope this video has actually helped you. do well to give this video a thumbs up, subscribe to the channel, and make sure you click on the notification bell so that I can get notification whenever I make new videos. I'll see you in the next one. Thank you.